In this special video, we're going to apply an institutional grade thinking process to predicting Tesla's price movements. Institutional thinking is very different from retail thinking. Retail looks at recent price. Institutional thinking, smart money thinking, looks at all of price history. Through the CTKS Method Standards Certification process, I'm going to give you a completely different way to look at Tesla and where it may go to the upside and to the downside. Let's run the numbers. The CTKS Method Standards process is the world's most advanced smart money buy level and sell level detection system that you can apply to any price chart. In this example, we're going to apply it to Tesla. To apply the CTKS method, you need to do two levels of certification, level 1 and level 2. I'm just going to show you quickly what is actually involved in level 1 standard certification. You can see that there are many different things that you need to do. You also require a specific mindset. And when we come across to level 2 standard certification, there's a few things that you'll see in a minute that we have to do there as well. You can see it's not a simplistic thing to do, but your money is on the line. If you don't know this, you're just guessing. If you want to invest and trade, this is an absolute must-know. It's very important for you, but I'll show you the outcome. Right now, looking at Tesla, we do not know where smart money is going to be buying and going to be selling. So let's mark up the chart. What you will actually see next are levels drawn up from the start of price history. But if we go back a certain amount of time, back to the 14th, we can see, and that's the 14th of December, we can see that price came down, found support, and it's now leveling out. But what does smart money see? It actually sees this. It sees a very different picture on Tesla's market structure. And what we do through the CTKS Method Standard Certification process is we look at a thing called ODMS, which is Objective Dynamic Market Structure. As Tesla was collapsing down, we can see that there was actually some very strong buying level. When price is above a specific level, it's a smart money buy level when it comes to the CTKS Method Standard Certification process. When it's below, it is resistance. The more of these smart money buy levels that you can actually put together, the more price will be supported. Because literally, smart money will step in and start to buy. You can see that around the 98.41 mark, the smart money came in and supported Tesla's price. In fact, there was so much smart money buying that it didn't even get down to 98.41. Now, what is the current situation? Tesla is currently 123.55, or in post-trading 123.02. We can see that there are two smart money levels just directly below Tesla's price, one at 116.65 and another at 115.67. Smart money will come in and take profits at 141.33 and 143.27. This is how we actually apply the CTKS Method Standard Certification process, looking down to the 1 hour time frame. Institutions understand market structure, and when retail looks at a price chart like Tesla's, they would say, well, there's not much support below. Tesla's going to drop like a brick. That is not necessarily the case. I'll show you why. I literally just went back 670 days. In terms of price history, you can see this 98.41 is a key level of support, as was this particular level around 116. What you can see is there's support at the 76, the 71, and the 66 level. There is actually support down here. I'll just zoom in a little bit for you so that you can see it more easily. You can see that smart money has a completely different perspective on the market than retail. Retail would be just looking at this particular level at the moment and saying, oh, there's a lot of resistance here. We can see this was resistance, this was resisted, that just a little poke up there, resisted. As soon as we get over this, it's clear sailing all the way back up. Not true. The real dynamic market structure inside Tesla will be playing out at 141.33. That is actually the key level that institutional investors and traders would be looking at. Retail is looking at RIP, or recent indicative price. Also, retail would think if we lose this particular level, 108.62 or 105.62, or worse yet, 103.48, that's it. It's all over for Tesla. But they don't understand there's an institutional buy level, and quite a strong one, at 98.41. After more than 30 years in financial markets and coming from a financial background, I can tell you recent indicative price literally is saying RIP to your money. As a former lecturer in first and second year statistics, I've been mystified across the years as to why people will throw their life savings at something but just not spend a small amount of money to understand where to buy and sell more effectively. From a short-term perspective, we can see that the key levels the smart money will be buying at 115.67 and 116.65. This will become a buying range zone, and further down at 98.41, 98.22, and just a little bit lower at 93.89. These are where we expect the market to be supported. Smart money's sell levels are at 141.33 and 143.27. Above 141.33, the next real areas of resistance are between 162 and 171. And then there's a bit of an air gap and just a minor sell level at 191.38. Inside Level 1 and Level 2 Standard Certification, you'll actually mark up the SPY. If we lose the 116.65 level and we lose the 98.41 level, you can see that there's a ton of smart money support at 76.30, 71.51 and 66.24. In all likelihood, retail would be selling just as smart money would be entering. And that is pretty much the way the game is played inside financial markets. Nothing is more valuable than knowing where smart money will buy and sell. I invented the CTKS method to help retail understand institutional footprints of money. And if you would like to learn how to do the CTKS method, you can simply pop across to www.ctksmethod.org and learn from me directly. The beautiful thing about the CTKS method, you learn once and you can apply it for a lifetime to think and profit like smart money. And when you mark up a chart, as soon as you learn how to do it and you understand it, you can apply that to any price chart. If you like this kind of analysis, please let me know. And if there's something that you would like me to analyze, please let me know in the comments. I look forward to seeing you in the next video. And thanks for watching.